VIX Central here. And indeed, actually, the open interest for short interest, that being people shorting the market, has gone down a lot recently, which to me is a pretty bearish indicator. When less people are shorting the market, that's the time for stuff to kind of roll over, I would think. I wanted to go to this chart that I have on Twitter that talks about that. It's from this guy here. And he is talking about, here's a chart, bets against U.S. stocks tumble, and you can see the shorts have gotten blown out, right? I mean, everybody who's short has just pretty much given up at this point because it's been such a difficult road for shorts. People have lost so much money, and it's been such a difficult road. So that is one key to the puzzle. But this is what I wanted to talk to you about to start with. Okay, so if somebody asks you, what does VIVX represent? What would you say to them? Now, I would say, if we look, VIVX is based on the VIX futures, right? So it's not the VIX, right? It's the VIX futures. Well, what's the difference? Well, the VIX right now went out at 22.96 on Friday, basically 23 points, right? So if you buy or sell VIVX, you're not buying that 23 VIX. No, you're buying a mixture of the futures, and right now, we're basically 2/3 of the front future, the SEP future, which is around 27. So we can go back to our VIX Central chart, and we can see that's not the right chart, and we can see that that's not the right chart. If we go back to the VIX Central chart, so if we're buying or selling VIVX right now, we're buying 2/3 of a 27 VIX and 1/3 of a 31 VIX, right? So that's the first thing you should be aware of. If you're either buying or selling VIVX, you are not buying at 23 VIX, where the VIX is now. You're buying futures all the way up at 27 to 31. So if we take 2/3 of 27 and 1/3 of 31, what do we get? It's between 28 and 29, right? So be aware, if you are buying VIVX, you're buying a VIX future that's 28. And so that's the first way to say that this stuff is expensive. The other thing I wanted to point out is when we talk about the roll and we talk about this contango stuff. Now, when things are really extreme like this, contango becomes easier to understand its effects. So let's go back to the chart here. So if we were to buy VIVX at the beginning of this expiration cycle, let's say 10 days ago, we are basically, if we buy VIVX, we're basically long at 27 VIX, right? That's where the future is, 27. However, if a month, let's say a month goes by and nothing happens, everything stays the same. A month goes by, all of a sudden this price, where did VIVX close Friday? Let's take a look. VIVX closed on Friday, 25.58. Okay, so at the beginning of the month, a VIX of 25.50, I just did it to myself again with this chart, a VIX of 25.50 represented 27 in the futures. But if a month goes by and nothing happens, because of rebalancing, all of a sudden VIVX of 25 no longer represents 27 in the futures, it represents 31. So thus, if all of a sudden the VIX was to pop a bunch after this month goes by, VIVX wouldn't move up as much because it's already representing a 31. So that is the extreme effects of contango when we're that steep. Is it replaces VIVX representing a 27 VIX with VIX representing, or with VIVX representing a 31.6 VIX, which is a big difference. It's much harder for the VIX to double from 31 than from 26, and both of them are elevated. Now, why is the term structure so steep right now? Well, my understanding of it, the way I understand it is that people are trying to hedge their positions. They're long these tech stocks. They're trying to hedge their positions. to protect themselves to the downside. So when you know that that's why the VIX is high, just because a lot of people are hedging their positions, then it makes you realize that it doesn't necessarily mean one thing or the other. It's perfectly reasonable that people would want to hedge their positions after they've made all this money, right, with the rally recently. And just because a bunch of people are trying to hedge their positions doesn't mean it's necessarily going to go down. So once again, as we've said in the past, this term structure is not necessarily predictive. Now, you could use other evidence like this tweet that I just showed you as a predictor that we're due for a down move soon. And I think if you surveyed, something like 96% of fund managers said that we're overvalued right now. So there is a down move in the works coming sometime soon. The only thing, and I'm talking to Spencer now, I hope I didn't lose you, Spencer, in the whole riff-raff before when I was trying to get organized, but the whole thing where everybody is talking about how the market's going to move lower, that makes me oddly actually kind of think that it's not going to happen quite yet, because so many people are thinking the market's going to go down this week. It seems like that's a big consensus that the market's going to go down this week, and that in itself makes me think that it might not yet. What's up, Spencer? So it depends on how you want to position yourself and how long you're willing to wait it out. To being long, I'm assuming you're still long some volatility somewhere. I have the opposite position on right now. I'm short VIVX stuff, but I'm ready to switch it around at any moment. It just seems like it's a hard time for the market to like crash when everybody's thinking about it crashing right now, right? That doesn't mean it can't happen, but and everybody's been waiting for these splits to happen Monday, and maybe after these splits happen, then the narrative moves on to something much more negative. I'm concerned about the fact, I was bearish of the stock market even before they did not make a stimulus plan and roll the stimulus out and all this stuff. From my understanding, all these people not getting that extra $600 is not good for the economy. However, the market seems to have shaken that off up until now, and I think the reasoning behind that is people still kind of assume that we're going to get some sort of stimulus. And the other thing is, it seems like they talk about a Fed put. It seems that when we say there's a Fed put, what that kind of means is that the Fed will protect the downside for us. So if the market does go down, then the Fed's going to start buying more debt and doing stuff to kind of support the market. But of course, this scenario can't last forever. You can't just prop up markets forever and ever and ever and ever, and you can't control. The Fed can't control the market, is what I'm trying to say. They can try to control the market, and they can think they're controlling the market for a certain period of time. But for us players who've been around long enough, we know that as soon as you think you're starting to understand what's going on, the market shifts gears, and it will shift gears again. But I guess the main point I wanted to make was that there are a lot of people out there buying expensive downside to protect their positions. Now, does that mean anything for the rest of us, and does that mean anything for the likelihood of the market to move lower or higher? I'm not sure. I know it's very frustrating, though, when for me it's like, I start with a hypothesis, or I start with a theory. Okay, my theory is the market is going to stay neutral to, it's either going to stay flat or it's going to move higher. And thus, to capitalize on that, I'm going to short volatility. And I turn out to be correct. The market does either stay the same or move higher, and yet volatility still goes higher. And we saw that. So it's like I'm right, but I don't get the money. So we saw that happening a lot last week. And you could say, well, if it had gone down, vol would have cranked even more. But it certainly is frustrating when you think you got it right, but you don't get paid. That's kind of where it feels like it's been. But, a normal, just to kind of put this in context one more time, as I put the wrong screen up again, the roll yield here. The roll yield is this fancy term for the difference between spot and the futures level, right? So this distance here between the bottom spot line and the first future and then the second future is huge. You know, you've got 23 to 31, right? That's like over 8 points, right? And then with the front month, it's huge as well. And we have not seen levels this big in a while. And it would be very, very concerning if we didn't have the narrative in front of us that kind of explains it, which is, once again, volatility coming into an election, a huge rally that has come off the lows and that doesn't really jive completely with the actual economy. All those things line up together for there to be a bid for puts in the S&P. And if you've watched any of the theory videos, they talk about skew. They talk about these puts, downside puts being bid up. And it makes sense, once again, because people think there's going to be a down move and they're concerned about the down move right now. And, you know, in my mind, all this concern about the down move is kind of an insulation against it happening in a way. But as always is the case in the market, there are mixed signals here, and there's two sides to this coin. And you know, one of the big mixed signals, once again, is this tweet, which is showing that the shorts, a lot of the shorts have given up, right? And that's the time. So what does it mean if the shorts have given up? Well, one thing it means is that if we start to rally, there's not a big short squeeze going to happen, right? If we move slightly higher, since the shorts have given up, there isn't as much of a squeeze. Now, there are people, of course, out there that are short gamma, right? And if you're short gamma, as it moves one direction or another, you're forced to cover, and that tends to escalate the move in one direction or another. So there are certainly people short gamma, but outright shorts on stocks are less right now, which means it's less likely to make a huge move up. The other thing, it's like when I look sometimes and I'm like, wow, today might be the day that the market's going to really go down. And then you look at a stock like Tesla and it's up like 100 points, or a stock like Carvana. These companies, obviously the people that are buying Tesla up 100 points have the exact opposite opinion of the market going down, right? They not only feel comfortable with the price where Tesla is, but they're willing to put their money where their mouth is on a bet that Tesla's going to move higher. So when I see that, I try to take the contrarian view. So a lot of times when I have a position, I'll do that. I'll say, what would I be thinking if I had the exact opposite position to the one I have on now? What would I be thinking? Would I feel better than I do now? Should I have the opposite position on? Would I feel worse? And I play these sort of mind games like that. So arguments for the upside. The administration doesn't want the market to. The administration is being very careful with what they say, you know, tweets and all that, because they don't want the market. You know, one of the biggest cases for the Republicans into the election is the economy, and the economy. The best part of the economy right now is the stock market, right? It's not wages or whatnot, because, you know, as much as the president can say, well, we've created all these jobs, all right, but we lost way more jobs than the ones that were created when the pandemic hit. So, you know, if you lose 25 million jobs, but then 2 weeks later you get 5 million back, you can say, wow, we got 5 million jobs, but you're still net down. And a lot of that has happened. But one thing that the president can point to with where there's no case against him is NASDAQ all-time highs. Market has come back a ton, right? And that's a big thing for many people. Let's face it, the rich have more of an influence over the elections than the poor do, and the rich haven't done so bad under this Republican administration. So it feels like the administration will do whatever it takes to keep the market rolling. However, all that being said, we are going to get a down move sometime, and we don't know when or where it is. And if you just follow the VIX and the VIVX, for example, you've got warning flags. Let's take a look at the VIVX really quickly. We haven't talked about that in a few sessions. It's kind of been all over the board, but last couple sessions it's made some moves. VIVX, of course, being the implied volatility of options on the VIX. And we saw it got down all the way to 100. Now, that's the first time on Wednesday when it got to 100. That's the first time we've been that low in several months. If we move back 180 days, we can see last time it got to 100 was at the beginning of the pandemic, right? The low we got to here of 104 was close, but hasn't been since before the pandemic really hit that we got to 100 on the VIVX. So it's had a little pop, but it's still pretty close to the lows, right? A lot of the market has been looking really strong, so it's really hard to tell what's going on. I'm less bearish than I was a few weeks ago. However, I'm keeping a very close eye on things as we move forward. There are some signs out there that are bad, but there's also some signs out there that are good. That's kind of where I stand right now. He says, even a small correction is going to feel bad, says Dazbuff. Yeah, a lot of people are saying, oh, well, a 5-point correction would be very healthy right here, whatever that means. But the market, the VIX seems very afraid of any little slightest down move lately. It looks very afraid, and it really it's really remarkable at the beginning of Friday how it was cranking. However, the end of Friday, it did finally move lower, but the futures didn't follow it. The VIX was down a 0.50, and the October future was actually up. Now, the SEP future was down a little bit, but it only ended up down 14 cents with the VIX down a 1.5. Now, that obviously can't continue forever, but we are setting up for a big we either have to, once again, and we've been saying this for a while, we either have to get a pretty significant spike in the VIX, or we're going to see these VIX ETPs make a move lower at some point. And for me, a kind of important point, at least for the SEP future, is going to be about a week from now. A week from now, we'll be past the halfway point for VIX expiration, and there will be serious pressure on that future to start to converge with the VIX. Now, we saw the spread between the VIX and the front month SEP future be anywhere between 2 and 4 points this week, and it went out currently. Let's see, I think we're over 3 right now. Let's see, so VIX 22. Yeah, so we're at almost 4 points right now with the spread between the VIX and the front month future. That has to come in, and as the clock ticks, there's more and more pressure on that. So a week from now, it's going to really start feeling the pressure, and thus, without a VIX spike, these products are going to be forced to move lower starting a week from now. But we're still far enough out from expiration that the futures can float around and do whatever they want. So, but once we get another week from now, it's really going to start. The clock's going to really start ticking, and not only on the front month future, but the second month future, which is, it's way higher than the other futures right now, and it can't stay that far away from spot for very long because everybody knows it has to converge with spot in the end. So there becomes more and more pressure on it to do so as we move forward. Let's take a look together once again. So this distance here, which is over 8 points, has to narrow one way or the other, and yes, we still are some time out. So we're showing the 15th is expiration, right? So that's a little over 2 weeks, right? For the SEP future, the next future is the 20th of October, which is a while from now, but that spread has to narrow, and there's going to be pressure on this stuff. So now, the fact that there's pressure on this stuff to narrow doesn't necessarily mean that there's more likelihood of the market to move lower, in my opinion. I think the fact that the VIX is elevated speaks to the fact that people are nervous about the market going lower, but it doesn't raise necessarily the likelihood of the market moving lower from my point of view. What this is saying, though, is that there is going to be more volatility out in October than there is now, according to this. And I know that's a little confusing since we always say this isn't predictive, but these futures are all trading way higher than where the VIX is now. So just a very simple assessment of that says that they're predicting that the VIX is going to be higher months from now. So, and how does the VIX get higher? It gets higher from us moving lower, is the main way the VIX gets higher. So there you have it. I know I haven't given you the answer as far as what the market's going to do next week, but I did give you something to think about, hopefully, as we come into the week. We'll see where the futures open. Weekend Wall Street, last I checked, was down 1 point. So that's not really giving us too much indication other than the fact that probably the futures aren't going to open doing a whole lot much so far. Okay, so weekend Wall Street showing down 4 points right now. So, and my feeling is that for whatever reason, retail thinks it's a good idea to buy these items on a split. And when you've got two of them splitting on the same day, it would not surprise me if people come in and buy both of these on the split. Not because there's any rational reason to do so based on the numbers, but just because on this irrational idea by people that splits cause stuff to go higher. And the publicity surrounding these stocks will make people that don't know better buy them, and thus it kind of becomes a self-fulfilling prophecy that these things move lower. And I would be surprised if they aren't higher at the end of the day on Monday. But who knows? Once again, I'm the worst stock picker in the world, so I'm not one to base your stock picks on. I can help you with other stuff, but your stock picks, better to go to someone else. So I hope that gives you some clues. Once again, I'm going to redo this video so that people don't have to watch the very beginning of it. And there you have it. Thanks for watching. Best of luck. Once again, my position, I'm still short the VIVX, and I'm short it via, I'll show you the position here. I'm short it via some put spreads. The NOV, I own the NOV 22.18 put spread. Now that doesn't mean that I'm guaranteeing that this thing is going to go to 18 in NOV. It's just a high bang for your buck put spread to have on at the moment. So it's kind of where, that's my position. That's where we are. And we'll see what happens. Obviously, contrarian views make a market. There's people lined up on both sides of this market right now, as there is always. And I wish you the best of luck for your trading moving forward. Thanks for watching. We'll see you next time.